Alright guys, today is March 16th, Sunday, 8:30 p.m. Eastern Standard, going through the weekly report. We will take a look at that in just a moment. What I am going to do is pull up a couple of things worth looking at for this week. First thing, I want to take a look at the Fear and Greed Index once again that we looked at last week. We're still in extreme fear. There's still a lot of panic, market's still selling off. But we did see capitulation on Thursday. We had on Thursday a pretty dramatic move down on all markets. And then Friday we had this gap up. So is the bottom put in? It's possible. We need a few days. I think this week will be very telling if we can avoid closing below or even dipping below that Thursday low. Then it probably is pretty likely that that's a near-term bottom. Now that doesn't mean we're just going straight back up. That could mean that we consolidate here and we kind of chop around. That could turn into a bear flag. We don't really know at this point, but that does look to be promising, and especially given that we had consumer confidence come out on Friday and the sentiment was really bad. Like the fact that the market gapped up and stayed up the entire day was very interesting. Now that's an update on February, but we did have consumer confidence. Sentiment plunges on tariff fears, inflation expectations jump. So it's interesting to see that, but at the same time, we're seeing the market gap up on Friday. And same thing with all these markets, right? NASDAQ, the Dow, everything gapped up. So we're gonna have to wait and see. Monday will be interesting. So seeing how the market opens tomorrow, I find that interesting. These are the setups that we're looking at. So I want to start off with a momentum indicator, which is not going to be that surprising to most of you that are listening. We have a momentum indicated for silver and gold. Gold breaking to an all-time high above $3,000 and silver getting back to these swing highs of around $34 to $35. I'm not a huge fan of buying silver here. A couple of reasons. One, the commitment of traders data looks like speculators are buying this thing up versus gold. It's actually the commercials that are a significant part of the move up. And silver also looks to be, from a forecasting perspective, it should probably be heading down. So an interesting play could be short silver, long gold. But I don't like shorting something that my momentum indicator is flagging as a buy, so we're going to just stay out of silver. We're going to look to get in a small position of gold with a wider stop. Other things we're looking at for setups, things that are absolutely set up right now. And if we hide some of the sidebars here, we have cocoa set up as long, which is very tough. We're trying to find a bottom here. Friday was a low that was put in, a swing low, so not quite a buying motion just yet. We're looking at the yen, which we're currently short, and we're keeping positions smaller here just given the volatility, but we're shorting the yen. And the yen short is a very good risk on trade. So if stocks do start to rebound here and that capitulation on Thursday does justify us moving higher, the yen should continue lower here, and that would get us a good trade without being long stock. We can be short the yen. The other things we're looking at are, and this market's a little bit more removed, or the next two, the lean hogs long, which we also saw capitulation here back in early March and then a move higher. We're looking to get long there, and then we're also looking at long soybean, which I've got a 304 price in there. Again, these are half-size positions. I'm not doing anything yet with lean hogs, but I'm watching it very closely. But I do want to get in on soybean meal. I like the chart. I like the setup. I like this move higher. We're seeing moving averages crossing, and we're also seeing from a forecasting standpoint, soybean meal should be at a low heading higher. Now, B term setups, and one that I actually really like and want to point out is crude oil. I actually think this is the trade to be in. I want to make sure I can get a reasonable price that I'm looking at. We've been kind of consolidating here between 67.50 and 65.50. I'm looking to go long. on crude oil. I think this is a play that is being underlooked right now. We actually see commitment of traders, commercials are buying RBOB, and they're also buying crude, while the large speculators are selling crude oil and RBOB. So I do think that crude oil is a good opportunity here for us to get in below 70, and I see us moving higher. We're going to have near-term resistance at probably, let's see, I mean, we're probably looking at, even at 70, we're probably going to hit some resistance here. Or if we draw, yeah, I mean, we're probably looking at resistance somewhere between 70 and 74 if we can break through that first chart. If we actually look at crude oil, there's major resistance that we're actually up against. So if we do break out, that could be very interesting. And this is kind of a good price level we're watching too. So we are seeing kind of a channel here, or not even a channel, it's kind of this consolidating wedge pattern that is due for a break. So I'd be buying here on the swing lows, and we're going to see what's going to happen with crude, but I do like the setup there. I like the Dow and I like the New Zealand dollar, but right now, not with this price action. We're not looking to get in on either of those. New Zealand dollar is kind of trending upward, but going to hold off on that as well, just given the other positions that we're looking at. What do I think is going to happen? I put some news in the report, the weekly report that's going into Discord along with this video. I'm bullish on buying the dip. I think that's the opportunity. I think markets tick up, markets go higher, and I think that is the sentiment. Even if we're wrong and this goes a little bit lower, I think for most investors, buying the dip would be the right move. And given the fact that volatility is very high right now, like if we look at the VIX, and we're hovering north of 20, with a 20 to 22 on the VIX or even higher, I would be not so worried as a average investor here. I would buy the dip and I would not pay too much attention to it. Things are going to chop around. If you're trying to trade this with big sizes, you're probably going to get chopped up. If you're trying to get in on S&P and NASDAQ, which I know there's a lot of these kind of day traders, swing traders that love focusing on the S&P and the NASDAQ, I think those guys are going to get eaten alive. You can get some good moves on an intraday basis on like the 5-minute chart with high volatility, but things can go in either direction. So I think if you're trying to do any reasonable strategy here and you're trading only the S&P or the NASDAQ, you're going to get chopped up and eaten alive. So I'd be very careful there. I'd be cautious. If the VIX is over a 20, I'd be very cautious if I were a trader who is trading equities, trading specifically the stock indices. If you're looking at things that I'm looking at for setups like energies, you're looking at soybean meal and lean hogs and the yen. The yen is probably the riskiest one out of those trades, but the volatility of the yen is not that crazy either. I mean, we see we're in a short like interim move higher, but this thing does not have crazy volatility. It has had it in the past, but lately it's been pretty consistently up, and we're attempting to find a reversal. So yeah, I think stay away from equities if you're a trader. Buy and hold, buy the dip. Things are going to go up on a long-term basis, and these other markets that have less volatility are still fair game if you can find opportunities, whether it's momentum, commitment of traders, or whatever your strategy really is. So that's my thoughts. I've put this all into the weekly report. I will get that into Discord, and we will talk again during the week. Thanks, guys.